Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 12th, 4:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, back to pure correction with short-term uptrend. We've removed the short-term uptrend as the three major large cap indexes that we track had their second close below the 21-day exponential moving average today and moved further below it. So no sense holding on to false hope. Now that false hope could turn around tomorrow if a surprisingly good info on inflation comes with the CPI report that hits about an hour before the open. So as always, we'll be on a lookout for that. And as always, we have a plan for either direction. So state of the market in an uptrend, you can see over here on the trend gauge, all three time frames: short term, 21-day exponential moving average, medium term using the 50-day moving average, long term using the 200-day moving average. All three time frames down/bearish. Leaders remain neutral, acting pretty well relative to the indexes. I think three, maybe four, have dipped below the 21 EMA this week versus Friday's list. So what happened today? Short-term uptrend ends. CPI Wednesday morning. You can see the red on the screen. Today was reminiscent of the last time day before we reported CPI. We had an afternoon breakdown too. So we'll see if how that carries over to tomorrow. We'll take a look at the charts momentarily and review that. So G6, our growth index, down 0.5%, S&P down 0.9%, NASDAQ 100 down 1%, Dow Jones down 0.6, mid caps down 0.2, Russell down 0.2. Global diversified 60/40 stock bond down 0.3%. In-house flagship portfolio protection slightly positive. Let's hit the tail of the tape and take a look at the indexes. But first, let's take a look at the team here at Revere. Trend following is what we do. It means we participate in the markets when they're trending above the three time frames I just showed on the beginning of the screen. It means when we've got mixed results there, we take a step back, take some usually it means our stops will have started kicking in. We're locking in profits or we're cutting losses very small. And then if we break to where we're fully bearish where we are now, we completely pull back, get the heck out of the way until the winds favor us. We're always going to take opportunities when we get short-term signals to dip a couple toes in the water and see how that plays out. We may get a couple of paper cuts that hit us, but we don't get overly concerned about that because one good trend pays for a bunch of little paper cuts. And if you don't believe me, Google Ed Sakota Whipsaw song. Take a look at the lyrics and you'll see what I mean. So let's get into hey, you want to reach out to us? I should probably tell you how to contact us. If you're going to come aboard, if you have questions about becoming a client, you're going to talk to this fine gentleman, Dan Stewart. He is our president, 80% partner, and he is a CFA, one of the most knowledgeable financial people I've ever met. Email him, dan@revereasset.com. You can also contact any of us, Tim, Hunter, Mural, or Don at revereasset.com. That's on the phone. That's 855-REAL-WEALTH, 855-732-5932. Let's get to the charts. Let's get to the tail of the tape. And you can see correction there. We got the same headwinds. Big day tomorrow with CPI. You can see our sentiment indicators. Nothing jumps out there, but we were mixed between bull and bear. Back to the bear case now with the rally failure break below the 21 EMA. So some news: the euro and the dollar hit parity, meaning €1 for $1. That means the dollar's been exceedingly strong. The euro has been exceedingly weak, and the 210 Treasury index is inverted, which is supposedly the most reliable sign of a recession. We'll see. Those are the news headlines. What we're watching coming into today. S&P, will it hold? How would it do against a 21-day exponential moving average around the 3870 area and resistance up above the 50-day moving average. Same thing with the NASDAQ 100. Well, S&P, we gapped below the support level at the open, that 3848. We tried to rally up into it, but we failed there. So that effectively means that this support has now flipped to resistance. Not good if you're a bull. NASDAQ 100, we had an undercut and a reversal against this 289.30 area, the 21-day exponential moving average on the NASDAQ 100. And then later in the afternoon, we broke down. You can see in the option, or sorry, on the action here, gap down at the open. We popped up to this support and resistance area. So here's the bigger picture. 3 days up off of the low here. Not a bad day on last Friday. First close below the 21 yesterday. That's a red flag. Follow through to the downside today. Look at the green line. This is the 21-day exponential moving average. We pay a lot of attention to that. Let me bring up this picture here. And what this is and what we are attempting to do, and we admit we're going to get some small stop outs on this, but this is just since the high at the end of March, this is what the S&P 500 has done. And what we look for all the time are low risk entries where either to the long side or the short side, to where we can get in as close to a critical area as possible, and then see if we can just let it ride up or let it ride down, and make some headway that way. So you can see this was an example of a low risk entry on a short. Actually, what happened in this is we were long. We got off of our longs here, didn't fully capture it the way we would have liked to. Broke below this congestion here. That was another good move down. Then we bounced up. Well, where do we bounce? Now we want to see what happens when we come into the 21. That's the green area here. We stopped this day at the 21. Next day we gapped down, so that's a failure at the 21. That's a low risk entry. Come down, make a bottom, back above the 21 here. That's a low risk entry on the long side. We just chopped around for a while. And here's this part that I was referencing relative to the last CPI report. Everybody was under the impression that this tight range would be consolidated when the CPI report came out, but we broke down the day before CPI, breaking down through the green line, the 21-day exponential moving average. This next day was a big gap down on disappointing CPI report. That was on June 10th, and then we continued to make new lows relative to where we were on the correction. Then we bounced, got back above the 21. Getting above the 21 is a good low risk entry. See where we go. Made virtually no progress, broke down below. Get off, get on the short side now. So you're really just trying to read the trends and go with them, and sometimes you'll get small gains, small losses, but we're trying to catch a bigger trend. And if you don't paddle and get on the surfboard when the wave's coming in, you don't know how far that wave can take you. So we're very content to get very small paper cuts, and because we know one good trend will pay for them all. So we actually entered short here, took some profits down here. We bounced back up. We got long earlier this week, back above the 21, but then today and yesterday we broke back down. Put an SDS short, that's a short SPX yesterday. We were long the Qs yesterday as the NASDAQ 100. This isn't the NASDAQ 100, this is the S&P. But we got off of our NASDAQ 100 when we broke back below the 21, and now we're net short again. So that's an example of trying to get in and out on the low risk entries. And what we'll want to do is every once in a while you'll catch them. Like here's an example of it in October of 2021. We're under the 50-day moving average. We're in a correction. We get back up above the 21. If you get back above it here, you rode this for a very nice gain up here. Here's another situation, not much of a gain before it rolled over. Here's another situation on 3/16 of this year, up above the 21, rode it all the way up to 46.37. Just go back and look for these examples where you either are rejected at the 21 or you reclaim the 21. Try to see how hard the wind's going to blow if it's going to continue to blow or if it's going to stop. You're either out with a small loss if you fail, which is the case of a lot of the red dots and green dots that I showed in that prior one, or today, another small loss that we took on the QLD. Our SDS is profitable now. And speaking of QLD, let's go to the NASDAQ 100. Yesterday, let me look at a 5-minute chart here. We saw a little bit of breakout strength here yesterday when it broke above this area that coincided with the 21-day exponential moving average. We got long. By the end of the day, we're underwater. We gapped up this morning, and then it failed. And when it failed, we used the opportunities of when it moves back up. This is an undercut and a reclaim of yesterday's lows. So now we're below the 21. We're going to take advantage of the 21 and some bounces to get out. We did 2 periods of selling today to get back out. Broke back down today toward the lows, and that's where we are net short again. So here let's go back to the tail of the tape here. That H pattern breakdown today at 3 o'clock. Let me go back to the 5-minute chart. It shows on the cues. Here's the H. Here's the stick of the H, and then a big H going from morning all the way till late afternoon before we broke down. Sometimes they break down, sometimes they don't. Here's one that formed yesterday, and it held. But always be cognizant of that pattern. You see it a lot. So as I said, let's go back to where we are here. Wednesday CPI expecting 8.8% tomorrow morning. Thursday we then have PPI. CPI is really, because this is the consumer. PPI is the producers. They have the option of passing the gain or the loss on to the consumer. So the CPI is given more weight. Bonds were strong today. Home builders continue to be strong. Banks with a little bit of a bounce. XME strong. Biotech has been one of the strongest sectors. Let's take a look at XBI here. XBI started weak, finished strong. Let's take a look at a daily chart of XBI. Alex discussed this on our podcast that came out over the weekend, how relative strength kicked in back here in early June in the biotechs. It's been relatively strong and showing strong price action. Prices prices sticking with the relative strength, confirming it. So we gapped down today, but the strength, even though the market was selling off, this looks completely different from what the market was doing today on a relative strength standpoint. So the early weakness was bought. Biotechs continue to be exceptionally strong. One thing that started strong and ended up weak, let's show Sky. This is a cloud computing ETF. Just the opposite here. This started strong and then sold off immediately, which says any strength in these types of cloud stocks is going to get sold off, and that's what we saw. Saw it yesterday at the open, saw it today at the open, finishing near the lows of the day. So you can see from the tail of the tape some of the weak sectors. Started off strong. IGV, that's the broad software. This certainly didn't get helped by Microsoft being downgraded, but the whole lot of them had a gap up and then a hard reversal. Oil's weak basically all day today. Ag commodities weak. DBA, TAN weak. And PDBC, that's just a broad commodity ETF, also weak. So I talked about our sales. We came in with an adjusted beta of 0.2. We're now negative with that sale of the 10% of QLD. Bottom line, afternoon swoon by the big caps, second close below the 21-day. Wednesday morning CPI is what we're looking for. So I showed the 2 of the major indexes. Here's the third one, Dow Jones Industrial Average, another one failing at the 21 at second close below. MDY never got back above. Third close below after touching it a couple of times. And IWM, 2 closes above it, now 2 closes below it. Let's show the growth portion of this IWO, which we entered when we got back above the 21 and the 50 here, but got stopped out yesterday, followed through to the downside today. We're out of our IWO. The only thing we own is a 10% SDS short. Again, that short taken yesterday when we broke back below the 21 on the S&P 500. You can see here breaking back below the 21 here on the S&P 500. It followed through to the downside today. So that's the tail of the tape. There's the major indexes we went through. Let's take a look very quickly. I showed IWO, which was outperforming the value component. Here's the value component. Doesn't look much better here relative to the 21, but we did get back above the 50 on IWO, the growth component. So growth outperforming, and this is why the leaders are holding up relatively well compared to the overall indexes, as you could tell by the tail of the tape that we showed, not the tail of the tape, the trend gauge that we showed earlier. Leaders still on neutral while the indexes. That's actually a good sign for the market, but we need to see some follow through, and we're really not getting any of the follow through. For example, GTLB. Well, let's just bring up the 21 over 21 list, and we'll see what led and what lagged today. So here's 2121 list. Let's go with price. So here were the big laggards on the day end phase. This thing has just been trading wild. It's got a very wide ATR. If you get into it, you got to be aware of that. We talk about that all the time, but 3 days up, down 8% today, breaking below the 21. GTLB, this is another one. Looks tight on here, but this is a 50 to 100 degree point spread here, down 5.5% today, still holding above the 21 though. Celsius, this has been a recent leader, 3 days up, pulled back. It still held the 21 on the pullback today, and the volume patterns are profitable or positive. Shockwave, a little bit of a pullback, but still above the 21. These are some, harsh pullbacks, but relative to their ATR, they're really not that bad, and they are holding above the 21. That's why our leaders signal is still on neutral. Let's take a look at what outperformed today. PDD, this got smacked yesterday on the China news. It's below the 21 inside day today. That'll come off at the end of the week, barring extreme positive action. AT&T below the 21, but bounced at the 50-day moving average. Monster Beverage continuing to hold up great. In fact, relative strength at a new high. AutoZone continues to act well, went sideways, barely down today. T-Mobile sitting on the 21, low volume pullback into the 21. So leaders for the most part still acting, okay. We haven't really bought any leadership stocks. We prefer to wait for the signals of the index to get us in, look for some follow through strength on the indexes, and then take some low risk entries in the leading stocks. And for now, we're just content to go with possibly some sector ETFs, some broad. You saw the broad growth ETF IWO that we bought, the Qs, the spiders, and see if we can get a trend above the 21 that can be profitable instead of just something that we're playing for small gains or small losses. So that's going to wrap it. As always, love to hear from you. Email don@revereasset.com or the phone 855-REAL-WEALTH. So wrapping up Tuesday. Big CPI number tomorrow morning, but wrapping up Tuesday, July 12th. This is Don Vandenbord reminding you, it's not how much you make, it's how much you keep. Nothing but the facts. Put your opinions in your back pocket and obey price and volume. Thanks for listening. Have a great day.